Google, 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 Google. Let's go over Google financials. We can't afford an intro on this channel, so I gotta sing it myself. Probably lost like 50 subscribers on me singing the intro. Google, Google. No, I'm not gonna do it again. Let's get into it. First of all, allow me to say hello. Good morning. I hope you're enjoying your Sunday. These videos have no views. They'll never get any traction, but I'll still make them for you guys, for the few that actually want to see me break down financials. This time we're doing Google. We did Amazon, we did Ford, we did GM, we did Tesla. If you want to watch these videos, I'm going to put an end screen at the end of this video for those breakdowns, so you could go ahead and watch these. In this video, we're going to go through the OG, Google. Now, Google is one of my favorite stocks. For disclosure, I own some in my own portfolio and have been in the stock for a long time. But I'm not going to sugarcoat nothing. I'm going to, call it like I see it, good or bad. I mean, I'm not going to be like kissing Google's ass because I own the stock. As always, don't click nothing, don't smash nothing, don't buy nothing. And let's get started. So first of all, before we jump into the financials, a few words from Uncle Tom about how the stock is doing in general. So first of all, we're having a strong correction, albeit the market is recovering a little bit over the past few days or week, whatever you want to call it. Google has been kind of steady throughout, not the best. I mean, they're down 14%, still underperforming the S&P 500, not as good as some of the Dow Jones plays, but I mean, not as bad as some of the other players in the tech sector, definitely not. So nothing to write home about, but kind of steady, to be honest, decent. Revenue growth, 13% year over year, despite some horrible economic terms, which is respectable. And also, Google has the same problem that Facebook does, which is they have a massive exposure to Forex issues. So it's the same cluster freak that Facebook is dealing with. Basically, the strong dollar is slaughtering their revenues from around the world. And Google took a 4% hit in revenues just on that alone. That's a massive number when you think about the amounts. The one thing I like about Google over the past year is that they're growing like a startup pretty much, and they're very innovative, and yet they're still doing share buybacks, reducing the float, and basically reverse diluting you, which is kind of the opposite of Palantir. That's why I have them in my portfolio. Just kidding. So they did $52 billion of share buybacks over the past 12 months. This is insane. Cloud business still not profitable, yes, I know, but it grows at massive pace, almost 40% growth and 35% growth. Already $25 billion in revenue. It's getting there. By 2025, this thing is going to make $100 billion a year and will be profitable probably. Q2 were not as bad as Meta or Amazon or Apple. But it's decent. I mean, 13% is not bad. They're definitely, I think, the best in that bunch, in my own personal opinion. But of course, this isn't financial advice. Talk to a professional. I'm just sharing my own opinion with you, my layman opinion. Now, check this out. A lot of you go, Tom, but you said you're a financial analyst. How is this a layman opinion? Because it's a fucking layman opinion, motherfucker. Do your own research. You don't need to tell you if it's good or not. Everybody's a layman. Do your own work, my guy. Nobody can tell you what to do. Layman. And maybe I meant something else by layman. Layman is back. Anyways, back to the financials. Let's get through it. Let's get it. So first of all, a lot of doodling going on. It all makes sense in the second. Hold on. I know it looks like a crazy person. John Nash kind of insanity. And it is to an extent, but we do share the last name at least. As a stage name. Okay, so cash equivalents and cash. I don't know why I said reverse. It's very strange. What would Freud say about it? 14% down. So we're down from $21 billion at the end of the previous year. End of June, we're at 18 billion. So 14% down on cash. Never a good sign, to be honest. But I mean, nothing to get alarmed about, but definitely a next year. So if you take a look at this thing here, I highlighted Goodwill because I freaking hate Goodwill. Goodwill is basically, for those of you not familiar with this thing, it's pretty much how much you overpaid for stuff. When you're acquiring a company, you're basically doing a PPA, price purchase allocation, and you have to say, okay, I'm paying this and this for that, this and this for that. The shares are this, and whatever's left, and you can't allocate it to anything that becomes Goodwill, which is basically an empty asset. I hate this shit. So that's why I did the 331 right here. So when you see 331, this basically means assets net of goodwill, and it's going to mean something in just a second. Hold on. So long-term debt, and in the Amazon video, by the way, I missed the long-term debt. I switched it up with leases, I think. Sorry about that. I mean, every time you comment about it, I'm going to put in the pin comment and let everybody know I'm not hiding or deleting comments that actually correct me on my mistakes. So that's good. My dumb ass confused. So this time I actually put a whole highlight on the entire line so I don't get confused. Long-term debt is about $15 billion compared to cash. Not that you should compare cash to long-term debt in general, because I mean, it's not repayable tomorrow, but just as kind of a metric to see what's going on. Still have $3 billion more cash than debt, even long-term. That's not bad at all. 3 times more liabilities than assets, even without the goodwill. And the total liabilities are down 7.3% from 107.6 to 99.7. So they're reducing liabilities. The ratio looks good. Everything looks healthy here. Now, if you go to this section, again, crazy doodlings. It's even crazier than this insane overlay, which I need to, by the way, fix. I'm sorry for all the arrows and shit going on in the overlay. Nobody has noticed this until now, but now that I mention this, you can't stop looking at it, and it drives you crazy. I know, I should have just kept my mouth shut. Anyways, 6 months, June 30th. So previous year, 117.2. This year, 137.7. It's a 17.5% growth if you compare the first 6 months of each year, this year and previous year. It's really not bad at all, but if you look at the cost structure, then the problem begins. 18.5% increase in COGS, still higher, and 20.5% in general costs. So 20.5% more in costs and 17.5% more in revenues. Not a good recipe, obviously, for success when your costs are growing faster than your revenues. Net income is down 11%. Not amazing, obviously. Given what we've seen with the cost, it makes sense. And we've seen it across the board with Amazon. We've seen it with GM. Everybody is basically eating the same cost pie. Let's call it this way. Okay, moving on just a little bit. Right here, I have something to show you. This is really interesting. So check it out, guys. Before we kind of let you go, this is important. So this is net cash from operating activities. So net cash from operations. This is literally one of my favorite metrics to see how good the business is. How much cents on the dollar do they get to keep after everything, income tax, everything on operations? Okay? Nothing like with the loans, just operationally. So up from 41.17 to 44.52, an 8% increase. Is that the 6 months? Yeah, for 6 months, 8% increase in net cash from operations. That means the business is going well. I don't think this is the best financials we've ever seen from Google. Yes, we've seen much, much better. But given the way the economy is, which is total shit, given the way their competitors are, which is basically in the same toilet position, their financials actually look pretty good. I mean, they have a lot of problems, but on the surface of it, it seems like I had a decent quarter, especially considering the circumstances. Now, as always, this video is not going to get a lot of views. Nobody's going to watch this shit. But if you guys enjoyed it, make sure you comment, like, and share it, for the algorithm to actually pick it up a little bit so we have a little bit of views on these sort of videos. And as promised, on the screen right now, you see where this thing is, where the financials are. I'm going to put the 3 videos I mentioned, breaking down the Amazon financials, the GM financials, and Ford financials, and the Tesla financials. Those are actually 3 videos. The Tesla is in both Ford and GM as a comparable. So you can go and check it out if you haven't yet. Enjoy your Sunday. Spend some time with your family and loved ones. See you in the next video.